All right, guys, welcome back. We are about to dive into the market reports for November 2023 for all of your hot markets around Indianapolis. My name is Chris Knight, Business Development Manager here with Red Door Property Management. But I know that you're already aware of that because you're already liking, you're already subscribing, and you're already getting alerted to all of our content and all of our market reports. Otherwise, why would you be here today? Mike, it's great to see you again. I can't wait to dive into this.
Hey, you too, Chris. Mike Taylor, broker owner, Red Door Property Management. Super excited to break these markets down. So as you guys know, we kind of take a look at Indianapolis market and then some of the submarkets and see how they're doing on a monthly basis. We take a look at active homes, average rent, days on the market. We're getting towards the end of the year here, so it does have a little bit of a slowdown. But let's dive in and see what we got for this month.
Let's go. Let's rock.
Let's do it. Let's do it. We got Indianapolis first. So I like this. I kind of like this new pink color here that we got going on. I like that.
I'm
Something
digging
a little
it.
different.
We got to remember, I think it's, is it February, breast cancer awareness. We've got to bring this back, but I love the transition from the red to the pink. It's awesome.
I like it. I like it. All right, on to the numbers here. So we're looking at November of 2023. This is Indianapolis. So just looking at the number of homes on the market, 2115 is the number of homes on the market. That's pretty consistent with what it has been. No huge change there. No, nothing to be too concerned about there. Average rent for this month is $13.75. So as you mentioned, this is typically almost kind of the slowest time of the year. This November, December timeframe, it really does slow down, and you're going to see it. I mean, look over here.
Yeah, I'd be shocked if we're not going to see a decrease in pretty much every one of these reports. I mean, this is seasonality. Yeah. This is exactly what we were expecting. We alluded to this in last month's market reports. This is right along with what we would expect.
I mean, this has been a little bit of a weird year just because we're still like post-COVID weirdness with the economy. So you kind of never know. But I mean, in theory, it almost looks like a bell curve, like it shoots all the way up in June and July, and then it comes back down in December. So that's what we're seeing here. So yes, that's a 5% decrease over last year, a slight 2% decrease over last month, but that's honestly to be expected for this time of the year. So yeah, not concerned about that at all.
And I'll tell you, Mike, I'm really liking, if you're looking at the dark blue line, that is our current year, and it's obvious this is much more subtle than last year. It kind of tells me that we are. And I alluded to this also last month. We are in a little bit of a correction, without a doubt. But this at least gives me the impression that we're at least more of a stable market, right? I mean, look at last year compared to this. This line is more in line with what I feel comfortable in seeing.
Yep, totally agree. And jumping to the next stat, average days on the market has come down. I think this is the same as last month, but it's so good to see that come down and stay down because remember a couple months ago, that was scary, like 120 or something crazy. And then it was 70 and it was like we were heading in the wrong direction. So this is, I mean, 47 for November is it's totally appropriate. It's totally average, heading in the right direction. I feel good about that.
Yeah, I feel very good about that as well. 47 days on the market. I mean, it's higher than we would prefer to see, right? But it does speak again a little bit more to an average seasonality that I think that we would see. But this is much better than what we were seeing a couple of months ago. 100 days averaging on the market is scary. I'm feeling much better about this seasonality, and in my own personal opinion for the Indianapolis market, my own experience, what I've been seeing over the last 30 days, aside from what we're looking at, the numbers, I'm feeling much more comfortable. Properties are starting to pick up, which again is so unusual for just a couple weeks before Christmas. I mean, I'm giving you a little bit of a sneak peek into what we're going to talk about next month, but things do feel a little safer, a little healthier, a little bit more optimistic. So this is good.
Yeah, I totally agree. Yeah, anecdotally, I mean, we're seeing. I mean, just even this past week, we're seeing a little bit of an increase in applications come in. There was a bit of a lull, and now we're seeing some applications come in. So it's good to see.
Yeah.
Good to see.
Absolutely. Yeah.
All right, jumping over to average sales price. Again, I know I say this every single month, but gosh, it's just so affordable here still in Indy. I mean, 227, 536 is such an affordable price point. Again, that's home sales under 500,000, kind of from the investor's point of view, but just so affordable. And it's not like one or two. I mean, look, there's almost 1,000 homes transacted at that price range. So that is actually up from last year, but then slightly down from last month. So basically unchanged for the most part, a small 2% shift. Nothing huge in terms of changing in the sales price, but still very, very affordable. I mean, that's just so affordable.
Yeah, absolutely. And again, we all know what's going on in the sales market right now, right? Everything is slowing down. Although I'm going to go ahead and give you another sneak peek into December because that's where I'm living right now. And the sales markets, there's been finally, a little relief in the interest rates. So I
Yeah.
expect what we're going to see next market report is we're going to see a plus in that month over month number. We'll see. Time will
Yeah.
tell, but even down 1.98%, I would have expected even slightly higher percentage than that based on the feeling of the market. Interest rates, everyone was scared. Home sales have just come to a complete halt. I still feel like that's a healthy number, and I feel like we're going to see the complete opposite next market report.
Obviously, we don't follow the sales market as closely as we do the rental market, but I can just tell you, just from what I've seen, it's the activity has slowed down significantly, but homes are still selling because there's just not as many on the market because people aren't putting them on the market because the interest rates are high, all of that stuff. So it's activity is down a lot, but homes are still moving and they're still selling pretty quick, actually.
Yeah, I mean, I'll play devil's advocate on that just a little bit, only because I mean I get the phone calls first. They come
Yeah,
in. I am taking on a lot of properties that have been we've been taking on a lot of properties that have been sitting there unable to sell. So I do get that perspective, but I hear what you're saying, and
sure.
I think you're right. But I just happen to be on the other end of
Yeah,
receiving those calls of those properties that happen to be sitting there. So I'm on the
yeah.
front lines of receiving that other end of that information.
Yeah, that's good. That's good feedback. Okay.
So yeah,
Well, anything else we want to talk about on Indy? I mean, gosh, look at this line though. It's like just like almost a mirror image of last year, like just down slightly. But I mean,
yeah, and
almost
I mean that
trending just
mirror
exactly
image,
the same.
and that's what you're going to see though. That mirror image, that decrease going into the winter months, the seasonality is kicking in. I mean that's completely normal. I feel much better about seeing a little bit more of, at least it feels like a little bit more of a subtle shift downward, not this steep decline, Mount Everest type
Yeah,
decrease. So I'm
yeah,
feeling good
yeah,
about the
for sure.
Indianapolis market. I really am. I wasn't as optimistic, rather. Last month, I'm feeling a bit
Yep,
optimistic. Let's go.
yep. Do it. I love it. All right. Well, let's that should wrap up Indianapolis. Why don't we move on to Fishers? I'll let you take this one, Chris.
Yeah, jumping into Fisher's market report for November of 2023. Again, I love the Christmas season. Now, look, the first thing I look at, and I assume most of our viewers are going to look at, is this median rental price over time. Ugh, man, that thing is jumping all over. It
Yeah,
does not have as near the subtleties that Indianapolis market had, but nonetheless, and I mean, gosh, it's hard for me not to immediately drag my eyes right over to the average days on market. I'm going to go a little bit backwards here because I'm going to speak out to what's blinking red to me.
yeah,
Average days on market, everyone knows, every market report I've done, I love the Fishers market. It's driven by a great school system, same as these other markets that we're going to talk about today that are great investor areas to be looking at. Fishers, I wouldn't be scared of it. We have an average days on market right now at 76 days, which is up 143%. If I remember right, I was probably a little bit more optimistic about the Fishers market than I'm going to sound today. Up 143%. That is higher than what speaks to seasonality. We may have just an overwhelming amount of properties on. Well, I mean, we don't, right? We're looking at active homes in the market, 117. That's not much
yeah.
different from last month. I mean, what do you think, Mike? What do you think is contributing to an average days on market up 143% month over month?
Seems like maybe even a blip on the radar, like maybe just a couple random homes that are throwing off the numbers. Because I'm looking at the data for the year. Like last month was 43, the month before that was 23, 28, 37. There was one at 72 back in June. That was kind of when everything was haywire, but I don't know. I might chuck this up to just kind of an off month and see what happens next month because I don't believe that. I think Fishers is a good, strong market, and I just don't. I kind of don't buy it to be honest with you. I
Well,
think
let's hope so.
I might just be a little bit of bad data this month. Like you said, the inventory is not crazy high. I don't know. I'm not super concerned about it. That doesn't. It's not a trend yet that I'm seeing. It's just like
There
one
you go.
month of just boom, and then it'll probably pop right back down.
I like that. I like that. You're right. This isn't a trend. This isn't something that we should all be freaking out over. It's not
Yeah.
burning down just yet. You're probably right. This is a little bit of a blip, and it kind of bleeds into seasonality a little bit, I'm sure. But any investor that just purchased a home in the Fishers market and they're going to look at this market report and see plus 143%, you might be a bit freaked out, and that's
Yeah.
okay. I would be too, but I don't think it's anything we need to just rush out of the market for. This is likely just a blip. And as we
Yeah.
can see over here, back to our median rental price over time, I mean, this kind of speaks to the market and how it's been over the last 12, even 24 months. It does kind of bounce around. It is still trying to find where it's comfortable in the market. So yeah, that's where we are on average days on market. Let's jump out of that. I'm going to go ahead and move up here. I know I'm going a little bit of backwards, but I had to just immediately jump on that alarming figure. But
For
up
sure.
to average rents, I mean, we're looking at 1950. This is pretty consistent with what we've been seeing month over month. It's down 3.13% month over month, completely normal. This is seasonality without a doubt, in my opinion. I don't think this is anything to be alarmed about. This is what we would expect.
I totally agree. Honestly, even that graph, it looks kind of like scary and squiggly, but it really represents kind of honestly normalcy where you're going to see it ramp up in the spring and summer, and then it comes back down in the winter. And that's very, very normal. So I'm not concerned about it at all. It's super, super normal. Just talking up the seasonality for sure.
Yeah, absolutely. In active homes, 117. We just kind of glossed over that a moment ago, but that's right in line with what we've been seeing here month over month. So we don't have an influx of other homes on the property or in the market in Fishers that's skewing any of this data, in my opinion.
Yeah, no, agree. So there's I mean sneak peek of one of the other ones. I think Westfield has a bit of an inventory issue, but Fisher's not so much. It's stayed pretty consistent. It's actually down. Just looking at the other data here from June, we were at like 126, 128. So we're down, which is normal for seasonality. So yes, Fisher's no issues on inventory for sure. Not over,
I
no
love it.
over.
I love it. That's great. Yeah. So let's jump over. Average sales price 337 694. That is our investor point of view. So anything that is selling under $500,000, which is exactly where we expect investors to really be looking. So I think that's a healthy price for the Fishers market. Number of homes sold 66, which is down 6.69% over month. Again, I would say this is consistent with what I've been feeling in the market. A lot of homes just staying on the market, especially in this area, right? A lot of families live in this area, and I think that's going to be consistent with what's going on in the sales market right now. Homes staying on the market longer than what you would expect in previous years, as there's a bit of a correction going on. Now, again, I think that number is going to trend to the positive side as we get into next month's market report, as again, I think the interest rates rather are becoming a little bit more favorable to buyers.
Yeah, I agree. And I think it's two comments for me. One, I was kind of shocked at this, the 6% year over year and month over month. I know you're kind of more on the front lines of it and you having these conversations a lot sooner than maybe what I'm seeing, but I was a little shocked to see that down 6%. So I don't know. But yeah, I think you're right. I think interest rates have improved quite a bit, and I think people are starting to normalize a little bit to some higher rates. You know what I mean? We're going to have to. It looks like they're going to be here for a longer period of time. So yeah, I agree. I think we're going to start to trend a little bit higher.
Well, I will say, and I don't want to get too much into the politics scene here, but I did read just yesterday that the Fed was alluding to potentially reducing the Fed rate by at least 3 times next year. So yeah, we'll see. We'll see what happens. But I don't know that I even agree that high interest rates will remain. Although, I mean, 30 days ago, I would have completely agreed with you. We'll see.
That's good. I actually didn't know that information. I
Yeah.
didn't hear that. So it's good to know.
Yeah. So this is good. I mean, I think this wraps up our Fishers Market Report. Just to put it all in a quick little nutshell, I mean, don't be alarmed about the average days on market. I think we're seeing still a Fishers healthy market, and I'd still be looking at this area as a potential investor.
All right. Let's jump over to Fisher's neighbor, kind of, Noblesville. I'll typically you take this one too. I know you typically like the Noblesville market, right?
I love the Noblesville markets. Now, If I were looking in the Fishers market, as I do instruct a lot of new investors to the area to be looking at that market, I would absolutely be leaning more towards the Noblesville market. It's been, I mean, let's start there at the median rental price. We're talking about being more of a subtle trend. That is subtle. I mean, these numbers have looked amazing month over month over month. There's not a lot of bouncing around, and that's right. That's an investor's
Yep.
dream. You want something that's going to be consistent month over month, and Noblesville's it. And even wow, man, I'm looking over at the average sales price, and this doesn't surprise me. I mean, you're seeing an uptick in that market, right?
Yeah. Yeah.
I mean, it's been a great market to be in. And Mike, and I don't know if you can pull up this data here really quickly as we're right in the middle of this, but what was our average sales price looking like the previous month? Can you give me some figures?
Yeah. Give me 1 second here. Let me pull this up. So Noblesville looks like last month, well, would be October, right? So October 334,
Yeah.
459.
Yeah, I mean, this is an area where you're seeing home values still
Yeah.
increasing, right? Man, if you're an investor that got into this market 60 days ago, you're still looking pretty good. This is where you want to be. So,
Yep.
all right, this time I'm going to keep it in line with the way we're supposed to do these reports. So I'm going to start with our active homes in the market, 131. I would imagine that that's even an uptick. Mike, I'm going to come back to you. Is that an uptick from where we were last month? 131 homes seems like we're up a little bit.
It is, and actually, this is I think next month what we should do is we should include like a historical graph of active homes, so you can see where the inventory is, and then a historical graph of days on the market too. So just to kind of some perspective, you know. But yeah, you're 100%
Absolutely.
right. You're 100% right. So last month was 121. The month before that was 109, 105. Back in July, it was 90. So
Yeah.
this is crazy that I mean usually you see the inventory go down this time of year. It's actually going up.
Yeah.
So yeah, I
This
mean
is great.
that's
I would be looking at this market and I'd be looking at this market right now, today. And I know that there's a lot of new construction going on, as there are in a lot of these markets. I mean, there's a lot of that still going on. But Noblesville is a great area. You could be looking at purchasing, or rather building a new home, secure that builder interest rate, which is lower than your average interest rate. This is a market you can jump into right now, and I think still be comfortable over even the short term to see some potential growth. So
yeah.
I love that number. So let's move on here. Average rents 1,900. My goodness, the optimism continues. We're up
Yeah.
2.7% month over month, and we're right in the middle, smack in the middle of the holiday season. Now I know that this is more of a November, but this is still this is still part of the holiday season. This is still going to see some of that seasonality trend, and we're up 2.7%. Mike, tell me you don't love 1,900 as an average rent in the Noblesville area.
I mean, it's so crazy. When I think of Noblesville, I just, for some reason, I always think it like super affordable
Yeah.
and not low end. That's not what I mean, but just a more affordable area in Hamilton County. You know what I mean? It was kind of a value play. And
Yeah.
my gosh, to see this at 1900 is just unreal.
Absolutely. And they, you know, they have a lot going on. They got the Ruoff Mortgage Amphitheater over there, or the Music Center over there. And then it's also probably getting some play on Grand Park, right? So there's a lot of action going on in this area that's going to help this continue to grow year over year over year.
You know what's so interesting to me? I'm going to jump back to Fishers real quick. So what I want to look at is compare the average sales price and then the average rent from Noblesville to Fishers. So 353 and 1900. I mean, it seems unreal to me that the average sales price is actually higher in Noblesville. I mean, I always think of Fishers as a much higher end community than Noblesville. And maybe that's true if we took out that 500,000. But I mean, is that unreal to you? Look, it's like the average rent's almost the same, and the average sales price is actually more than Fishers. To me, that's
That's
crazy.
fascinating. That's fascinating. I'd love to dig into more of why that might be, but yes, I'm glad you pulled us back here. That's completely surprising to me. I wouldn't have guessed
Yeah,
that.
me too. I just noticed that, and I was comparing the two. I was like, oh, wait, Noblesville's more expensive than Fishers? That's wild.
Wow. Yeah. Well, maybe it's just growing by investors. I mean, if they're watching our market reports, they're rushing
Yeah.
to this area as we
Exactly.
speak.
Exactly.
I mean, and
Exactly.
so I'm just going to go on here. Average days on market, you're down 46% month over month. This is in the month of November where things are starting to slow down a little bit. You're going to see average days on market pick up a little bit. Average days on market in the month of November at 27. Let's go. I need to
Exactly.
call my realtor right now. We need to see what's happening in Noblesville. This is awesome. But down 46% month over month. That's incredible. I love it. Maybe that's why, I think to what we currently have on the market here, Mike, and come to think of it, I don't think that we have much, if anything, currently on the market in the Noblesville area, probably because they're renting so fast.
We need to get a couple for sure.
Yeah, exactly, exactly. All right, all right. I'm gonna settle down here. I'm gonna jump over number of homes sold, 67. That's up 5%. No surprise there with all this data that we've just gone over. Month over month, up 5%. I would imagine that's only going to continue, even going into December, no matter what happens to interest rate. This market is here to stay.
Yep, love it, love it, love it. All right, let's move on to my favorite market, which is Westfield. I think maybe we need to stop talking about Westfield and Noblesville because it just keeps getting better and better, and the prices keep going higher and higher. And but problem is the number of active homes. I kind of alluded to this before. Let me see if I can pull up the historical data while we're talking here. But we got 101 on the market now. And just for some perspective, so if I go back to January of 2023, almost half, 57 houses on the market in January 2023. We had like 68 in May, 79 in August. It's just kind of slowly building up. So next month, again, we'll do that historical thing so you can see, but inventory is definitely creeping up here in Fishers. I think people are listening to these market reports and,
I know.
and buying all the houses in Westfield.
I think we're gonna have to reach out to these towns and start getting sponsored. I mean, if we're gonna start
Exactly.
driving the market like this, we've got to be getting paid for this. Let's go. But yeah,
Exactly.
I
Exactly.
mean, it doesn't surprise me that active homes is going to go up in Westfield. I mean, there's a tremendous amount of new construction going on there,
Yeah.
tremendous amount of development. So
Yeah.
none of that surprises me. Even and I'm not going to jump ahead of you, Mike. Well, you know what? I'll let you continue, and I'll just kind of blow it up as you go along.
But no, you're right though, Chris. I mean, there is more supply, but there's also more demand. I mean, there's so much going on in Westfield. It is crazy. My parents actually live up there, and every time I drive up there, there's something new. Residential, commercial, you name it. It's wild how much construction is going on up there.
I
So
agree. I agree
it
100%.
supply is increasing, but demand is too, I think, right alongside. Jumping down to average rent, 22.95. So it is down a little bit from last month, 4%. But I mean, look at this, up 14% from last year. I don't think any other of the markets that we have are even close to that. So I mean, this is just, you can just see this trend here is just super far above last year, just consistently far above last year. So yes, this is down last month. Maybe that's some of the supply. We'll see how that kind of plays out. But I mean, overall, gosh, if you bought here even a year ago, you're looking good as an investor.
Exactly. And to be honest with you, it doesn't surprise me that our dark blue line is over our last year light blue line. Just knowing what's going on in the Westfield market, they're doing such a great job of driving new residents to that area. I mean, it's very appealing. And I mentioned Grand Park. Well, this is the Grand Park hub. I think they're just doing a great job at driving more people wanting to live in that area. So I expect that we are going to see that trend continue no matter what's going
Yep.
on in the market. I suspect Westfield's going to continue to grow. So I think this is still a great investment market to get into, no matter what average days on market's going to tell us next.
Yeah, I totally agree. I mean, there's lots of runway. Again, you go up there, there's tons of construction, but there's also still tons of land and still lots going on. They're adding tons. So yes, I still think the future is bright for Westfield, even despite a little bit of a blip on the average rent going down just a teeny bit this month.
Yeah, I like what you did there. It does certainly look merry and bright.
uh, Average days on the market, 60 days on the market, which is high. I mean, you can see that's a 60% increase from last month. So we'll have to keep an eye on this and see if this trend continues. Is this oversupply just here for the winter? Kind of what's going on. Average days on the market 60 it's high. I mean, that's certainly high. It's higher
It
than we'd
is.
like to see
It
for sure.
is. But I mean, up 50% month over month. I'm going to have to recall what we just went over in the Indianapolis market. I wouldn't be surprised if this is just another blip that we're seeing. 57% is a big jump, higher than I would have expected in the Westfield market. I
Yeah.
actually would expect that number to continue to go down as we go over future market reports. But I'm gonna have to say that I believe that this is just another blip.
I think so too. And maybe, there is a lot of homes on the market as compared to last year. So, oh, I think this is kind of one to keep an eye on. I mean, I think long term Westfield is fine. I
Yeah.
think over the next 1 to 3 months, I mean, we might see a little bit of a dip here. But 1 to 3 to 5 years, if that's your time frame, then fine. You're going to see a ton of appreciation. I mean, I think that's the play here in Westfield is appreciation. You know what I
Yeah.
mean? This 383 is going to be 483 before you know it,
Yeah, completely
So
agree. In a lot of these markets, I've already mentioned that there's a lot of new construction going on, and that's even more so in the Westfield area. So I couldn't agree more. Appreciation is your play here.
for sure. So on that, jump over to sales price, average sales price of 383, 822. That is up from last year, down just a little bit from last month. So this is kind of really in between Fishers and Noblesville. So Fishers, we saw kind of a 6% decrease. Noblesville was about a 5% increase. This is kind of right there in the middle.
Yeah, I mean that screams healthy. I think that'll remain consistent even over the next couple months. Number of homes sold, 82. That's still an average sales price for the Westfield area, in my opinion. Just because I'm born and raised in this area, 383 seems like a healthy entry point for the Westfield area.
For sure. And only going up, I think.
Exactly.
All right. Anything else on Westfield?
No, I think that does it. Yeah, Westfield. I'll be looking at it.
All right, let's jump into last one, Avon.
Avon, I mean, this is another good, attractive area that I love. And again, I know it sounds repetitive, but a lot of new construction going on the west side of Indy. And really, I mean, over these market reports, this is the only one we've covered a lot of the east side. This is strictly all the way on the west side of Indianapolis.
Yep.
And I think it also speaks to not only the Avon market, but in my personal opinion, we've had this discussion before, Mike. I believe that this also speaks a little bit to the Brownsburg market as well. So if you're looking on the west side, you're looking in Brownsburg, this report, I believe, is still going to reflect what you might even see in the Brownsburg area. So bear that in mind as we kind of go through this.
Yeah.
But let's jump in. Let's go median rental price over time. Now, this, we saw a big little dip there in February, and then all of a sudden it just bounced right back up. That is my definition of a blip. I think
Yeah.
that's
Yeah.
that's exactly what we were talking about when we mentioned that in the Indianapolis and Westfield market. These blips do happen. Who knows why, but they do happen. And then we're getting into a sneak peek in December, and we're going to see a peak, actually an increase in our average rents going into December, which I also find pretty fascinating because we all know it. We're in the middle of seasonality, Thanksgiving, Christmas. Everything tends to slow down. Average rents go down. Average days on market tend to go up. So
Yeah. What's interesting though is that same thing happened last year. I think in most of the other reports, December you're heading down, but for some reason Avon like peaks almost in December. Happened last year. Looks like it's going to happen this year too. It's really interesting.
you're right. I wonder if they have some Christmas festivities over there that
They
I'm not
must.
aware of that maybe
They
I need to
must.
go over and take a look at. Okay, let's go into active homes. 56 is what we're currently seeing in the Avon market. So it seems to be a little bit more of a smaller investor market. And Mike, I don't know how much you know about that area and what the population looks like in comparison to Fishers. Would you say that it's a smaller town population wise than your Fishers or Noblesville?
I think so. I don't know any facts off the top of my head. I just when it feels like a smaller town to me, feels like it has a smaller town feel anyway, for sure. I know it's been growing quite a bit, but I don't think it's been growing quite as fast as Fishers and Noblesville and Westfield. So I,
Yeah,
I
I
think it's
agree.
smaller, but don't quote me on that.
Yeah, I agree. I'll have to look at some of that data. That is a fascinating figure to know for sure as we talk about these market reports. But let's go into average rents, 1807. This is a stable market, right? I mean, we're down 1% month over month. That's nothing but seasonality, in my opinion. That's exactly what you would expect. We're down 4% year over year. I'm not alarmed at all by 1807, especially when your average sales price over there is at 352. And correct me if I'm wrong, Mike, I think in Noblesville, we were looking at 355 as an entry point for an investor point of
Let's
view.
take a look here. Noblesville 353.
353. So these are pretty close comparable markets. Now, your
It's
average rents
crazy.
Yeah, yeah, really. Your average rents in the Noblesville area were a little bit higher, but I think that this is a very comparative market to what you're going to see on the east side of town in Noblesville markets. So down 1% month over month. I like it. I like what I'm seeing there. And now here we go. Average days on market 24. I mean, here I just started comparing it to the Noblesville market. Well, here it is. I mean, 24 days on the market in Avon tells me that people are drawn to this area. They want to rent property in the Avon market. I love that number. It's down 40% month over month. I absolutely expect that trend to continue even as we get into December, especially because when we got this sneak peek at the median rental price over time, we see an increase in December. So I can
Hmm.
only assume that our average days on market are going to stay consistently low.
Yeah, I agree. It's actually kind of weird how similar this is to the Noblesville market in terms of data. Like the average sales price, I know you haven't got there yet, but that's up. Days on the market is down. I mean, it's pretty similar to the Noblesville market. And I mean, one thing I think we should mention is that, these submarkets that we're talking about are all pretty desirable. I mean, they all have good schools. That's probably what drives, a lot of the desire to move there. Certainly in Avon, they've got great schools. Fishers, Westfield, Noblesville all have really, really good schools. Those are, if you're looking to invest and if you have a long-term time horizon, I mean, good schools is one of the best things you can look for because it's always going to be desirable for families and it typically attracts a higher quality renter type family that you want to have living in here.
Absolutely, and I know that our viewers are listening to that right now, and they're like, "Yes, Chris set you up for that. He made you say that because he says that in all of his market reports." Because I mean, I'm telling you, that is a main driver in a lot of these
For sure.
markets. These
For
families are
sure.
drawn there by these good school systems, and that's the first thing. If I'm looking at a new market, based on my experience, that's the first thing I'm going to be looking at is that school system.
Yeah. As an investor, it's like a giant safety net. You know what I mean? It's like that market's not going anywhere. The desirability is not going anywhere. It's just a huge safety net for an investor to buy in a good school district.
Completely agree. Completely agree. All right, let's not drag this on. Average sales price 352. I just quickly mentioned how it relates to the Noblesville market. That's a great entry point, I think, when you're going to see an average rent at 1807, which I believe will continue to go up going into 2024. I'm a strong believer in that. Number of homes sold, we're looking at 50 homes sold in the month of November 2023, and we're up 3% for your average sales price, which again, I hate being repetitive, but I'm surprised. I mean, that's based on my experience. Homes are staying on the market longer, but maybe this speaks to what you were saying, Mike. You're kind of feeling like the sales market's still continuing to churn.
Yeah. Again, you might kind of have your finger on the pulse a little bit more than I do because you're talking to investors who, well, sometimes, so we do get a lot of people who can't sell their home in this market, and so then look to maybe rent it as an alternative until they can maybe ride out the sales market or it bounces back or whatever. So I think you get those calls a lot more, of course, than I do. So, but yeah, that was my feeling is that the sales market is kind of still chugging along, just at a lot slower of a pace. But I mean, we're probably in a little bit of a transition here for sure.
Well, if I am right and the market is slowing down, like I think a lot of people are feeling, Avon appears to be in a pretty good market to be in. If
Yeah.
that is the case, you're still seeing an increase on your average sales price. I think that's awesome.
Yeah, for sure. Absolutely. Avon is a good, strong market for sure.
Yeah. Well, I mean, for me, I think that wraps it up. I appreciate everyone tuning in today. If you haven't already, you have to like and subscribe. We're trying this new podcast type market reports. I hope you guys are liking it. Let us know in the comments. Let us know what you guys are thinking about these. Would you rather us break these up again like we were doing previously, or do you like kind of the back and forth banter of what's happening in these markets, and also kind of just consuming all of these market reports in one long form video? Let us know. We would love to see your feedback.
Yeah, absolutely. I love it. I like this. I like this format. I like this style, but let us know what you guys think, please.
Absolutely. Mike, it was awesome. I love these. I can't wait till we do this again next month. Let me know if you got anything you want to wrap this up with.
No, maybe just happy holidays. You got all your Christmas shopping done?
Oh, you know I don't. I'm looking seriously, I'm panicking. In fact, I probably should hit the
Me too.
mall right after this. So we're a matter of a week and a half away from Christmas, and I always get paranoid too, right? Like I'm gonna be the one guy that shows up to Walmart and nothing is left on the shelves.
Exactly.
I'm just picking
Exactly.
something out from the checkout line.
Exactly. All right, guys. Well, I think that's a wrap for this month.
Perfect. All right, Mike, I'll see you.
All right, see you guys.
Take care.